Monday, August 22nd, 2022, Maneco 64, home of alternative economics and contrarian views. So if you believe that CPI, or what they call inflation, is going to come down to like 2% in the next year or two, and that interest rates are going to stay under control. And that's, of course, the mantra that has been sold by the City of London economists, the Wall Street economists, the central bankers, and politicians. Well, if you believe that, I've got a bridge to sell you as well. And I'm going to show you proof today as well, in my opinion, that this is being done on purpose in order to inflate the currency. And when you inflate the currency, you make the debt owed by the government and the big corporations and debtors in general become worth less and less. But it hurts, of course, pensioners, it hurts savers, and it hurts the average worker. Of course, the very wealthy will benefit from it because they have a lot of assets and they can protect themselves. So that's what we're going to look at today. And before we go on to the subject, just wanted to show you a little chart here from Dr. Thorsten Polleit. He's an economist at the University of Bayreuth in Germany. I've known Thorsten for years. He used to work in the financial sector, and I used to communicate with him because he's also a believer in the Austrian School of Economics. He calls it here knowledge of sound economics, and I agree with him. And for those of you who are not aware of the Austrian School of Economics and want to learn more about it, well, first of all, keep listening to me because I'm a proponent of the Austrian School, but also go to the Mises.org website. That's how I learned about the Austrian School of Economics. I've been following the Mises Institute for over 20 years, and they've got great information there. So make sure you put that blog, Mises.org, on your list, so to speak. But this chart is really good here. It just goes to show you the more sound knowledge of economics you have, the less trust in government you have. So there you go. I'd like to show you that. And of course, that is related to the subject of today. So even a former central banker, Mervyn King, he was the governor of the Bank of England from 2003 to 2013. He got us started on QE and zero rates. But he said recently, this year, that central bankers they've got a new theory of inflation called the King-Canute theory of inflation. And that theory is that just because you say inflation or CPI is going down to 2% means that it will. So you don't need to raise rates double digits to stop prices rising at double digits. You just have to say, wow, it's magically going to do it. But yes, I agree with them. It's not going to happen unless they really want to, well, basically destroy the whole system right now. And I think that would be good because it's not a good system. We have a credit-induced borrow and spend economy that is really not healthy, up to here in debt and leverage, not just government, but corporations and individuals and everything else. So, yeah, Mervyn King is right about that. I guess you need to have retired to say the truth. Why didn't he say that back in 2008? Why didn't he refuse to do QE and cut rates to zero? Well, because the Bank of England and the central banks are not really independent. And just before we go into why I think there's no end in sight to inflation, just wanted to give you a refresher here about inflation. And what inflation really is, inflation, of course, is not the rising prices. Those rising prices, consumer prices, are the consequence of years of inflation. Inflation, as you should know by now, is the increase in currency and credit out of thin air, not backed by any monetary asset like gold and silver. And it's done in a fiat currency system. It's been done in spades since 2008, but it's been done as well massively since 1971 when President Nixon detached the whole system from gold. Yes, and the people who make this possible are the central banks and the politicians. Central banks, they oblige the politicians with easy credit, manipulated interest rates in bond markets by money printing, which has been done in spades, of course, since '08 when Mervyn King was at the helm of the Bank of England. And the politicians do it through fiscal spending, and the general public have been basically brainwashed into thinking that government is there to help not just the general public, but also leaders of industry. So, this is what Felix Sommery said in his memoirs, The Raven of Zurich. And I quote, "The state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible." So I'm going to tell you, if you know this and you know it's happening, really happening, then you are at the right-hand side of that chart. You have no trust in government, and you have a very sound knowledge of economics. So last night when I was doing my live stream, this headline came out, or this story in the FT. Liz Truss hints at help with energy costs for businesses and households. Front runner in leadership race shifts position as Treasury prepares options to tackle rising bills. So many of you have read When Money Dies by Adam Ferguson about the hyperinflation in the early 20s in Germany and Central Europe. And we're doing the same thing. They also thought that the more money they printed, the less severe the cost of living crisis or inflation would become. And it ended up in destroying the currency, which is what hyperinflation is. So we're going down the same road. Do these politicians really know what they're doing? I don't think so, but the whole paradigm has been pushed into doing this for generations now, I would say, a couple of generations at least. And it wouldn't have mattered if it was another party or politician. They're all going to resort to giving the public what they want. And it's not just public, but it's businesses as well. So let's quickly go through this. It says Liz Truss, the front runner to become Britain's next prime minister, has signaled she will intervene to help companies and households deal with soaring energy bills this winter, pledging assistance across the board. So how is she going to pay for that? And I think it was Margaret Thatcher who said there is no such thing as public money, but there's taxpayers' money. It's going to come from the people she's trying to help. It's going to make the currency even more worthless, and it's going to make the cost of living crisis even worse. It might help people in the short term, but come 6, 12 months or 2 years later, it's going to be even worse. And this is what is going to inflate the currency and help the government pay off its debts. Do I think Liz Truss is aware of that? Not really. She's just a pawn in a big scheme. And that's why you need to run away from fiat currency as much as you can. Yes, I know there's short-term fluctuations in prices of hard assets and gold and silver. I'm sticking to it. You need to do your homework before you decide. I'm not trying to tell you what to do, but to me, this looks really bad. So let's continue here. She says, Her pledge comes as Ofgem, the energy regulator, prepares to announce a sharp increase in the energy price cap, which dictates bills for the vast majority of Britain's household will rise from £1,971 to about £3,600 on Friday. Analysts are forecasting a further rise in January to more than £4,200 and another jump next April, posing a grave threat to household finances. The intervention by Truss, the Foreign Secretary, in The Sun on Sunday, newspapers, is the latest shift in her position from early August when she told the Financial Times that she did not believe in giving handouts. So she's already changed her mind. She knows she can't win. She can't be popular. It looks like the Labour Party now is ahead in the polls. So she's probably looked at that. So Kwasi Kwarteng, the business secretary, who is expected to be chancellor in a Truss-led government, also signaled over the weekend that further help is coming to deal with the energy crisis. So up until now, business industry, they haven't been helped with the caps, even though the caps keep getting lifted. And businesses are in trouble, especially small businesses. They could go out of business very soon. So the government is going to step in and help. Kwasi Kwarteng, some of you have asked me about him. He's written a book about gold, which I have actually read. And it's a very good book about the history of gold and wars and debt. Does he mean he's a sound money proponent? No. He's writing more as a historian. He doesn't really believe in small government and sound money. So don't hold your breath and don't put your hopes up on Kwasi Kwarteng. So another article that I saw, I think overnight or just this morning, I think it was last night, top Russian diplomat dismisses hopes of a negotiated end to Ukraine war. And here's why I think they're doing it on purpose, because the supply of energy has been a big part of the rising prices with the war in Ukraine. Energy in Europe has been really, the supplies of energy, especially natural gas, have been curtailed in Europe because of all the sanctions on Russia. But it didn't have to be this way. We could have negotiated with the Russians. We could have stopped pushing Ukraine to want to join NATO. But no, we provoked Russia. And now it looks like the top Russian diplomat is saying that there's no end in sight to the war, and this is the reason he gives. So let's quickly go through the first part of the article. It says Moscow sees no possibility of diplomatic solution to end the war in Ukraine and expects a longer conflict. A senior Russian diplomat has warned, as President Vladimir Putin's full-scale invasion reaches the 6-month mark this week. So here's the important part, in my opinion. Gennady Gatilov, Russia's permanent representative to the UN in Geneva, told the Financial Times that the UN should be playing a bigger role in attempts to end the conflict and accused the US and other NATO countries of pressing Ukraine to walk away from negotiations. There would be no direct talks between Putin and Ukraine's President Volodymyr Zelensky, he said. Now I do not see any possibility for diplomatic contacts, Gatilov said. And the more the conflict goes on, the more difficult it will be to have a diplomatic solution. So it's going to continue, the shortage of energy supplies. And that's why I said I think they're doing it on purpose. The West, they've printed trillions upon trillions of dollars of funny money, not just since 2008, but especially since 2020. And then they provoke this conflict and put sanctions on Russia. We've cut our own supplies of energy. I think the German government or establishment, they're tired of living. They announced yesterday as well that they're going to discontinue their last 3 nuclear reactors very soon. So it's going to be a very fun winter for Germans and German industry, not. And Germany is an economic powerhouse of Europe. And with what's happening in the energy sector, it's going to be decimated. And the whole of Europe is going to be decimated, the UK included. So there you go, no end in sight to inflation. So today we're going to start looking at natural gas as we start our market report. So we'll move on now to look at where the markets are. So it's 8:30 a.m. London time. So here we go. And I'm not surprised. We're going to start with the Dutch TTF natural gas futures. Yes, usually we leave that to the end, but I think it's becoming more and more important. We saw German PPI reach almost 40%. This will basically mean that German CPI will go into double digits. I would say the old Bundesbank presidents, they must be, if they're still around or if they've passed on, they must be rolling in their graves, or they must be very upset about what they've done to the currency that Germans have to use. If Germany still had the Deutschmark, this wouldn't probably be happening, I would say. But look at the Dutch futures. Well, it's at an all-time high, 270, and it's up over 10% now. And if you look at it going back 2 years, it's more than 13 times the average price that it used to be in the previous decade before 2020. So this is going to be devastating. And as you can see, there's no end in sight to the conflict between really Russia and the West, I would say, NATO. And the people, of course, who are going to suffer, well, we are all suffering from it, but especially the Ukrainians, the Ukrainian people, I would say. So let's look at where the dollar is versus the ruble. Yeah, the ruble is strengthening, and not surprisingly, we're back down below 60. The dollar is trading at 58.60 to the ruble. Let's get back to the normal update. We'll start with spot gold. Well, it's trading at 1738.50. It's down another $8. Yes, frustrating, but I don't want to give up my precious metals, especially with what's happening now. If anything, I'm going to try to stack even more. That's my view. You might have a different view, or you might have to do your homework a bit more to really learn about what's going on. Because when you know what's going on with inflation, governments, and everything else, you will understand why gold and silver are so important. While the high has been 1750 and the low is right here, 1738.50. Silver's continued to come off. It's down 12 cents at 1891, or 0.2%. High's been 1917, the low 1890. And you can bet the Bank of England and the bankers at the ECB and the BIS are probably very active in the paper market. That's the only thing they have right now to keep people blind about the destruction of their currencies. They need to keep their currencies relatively strong versus real money. The Dow futures is down 236, or 0.7%. The Nasdaq 100 future is down 1%, or 133 points. And the S&P 500 is down 35, or 0.7%. The FTSE is down a third at 75.12. Eurostoxx 50 is down 1% at 36.85. To the currencies, sterling is down 0.25% at 118.01. The euro is down 0.25 as well. It's trading just above par, actually, at 10012. And as I said, this is not the all-time low of the euro to the dollar. I think it was around 82 cents, so still got a long way to go. The dollar is unchanged versus the yen, 136.92. The dollar is unchanged versus the Swiss franc, 95.93. And the dollar is up 0.2 versus the yuan at 684.72. Aussie dollars up 0.25%, actually at 68.93. And the dollar is up slightly versus the Canadian dollar, just above 130. The Kiwi dollar is up 1/3 at 61.92. To the general commodities, WTI crude, that's down 1.3% at 89.21. Brent crude is down 1.2% at 95.05. And high-grade copper is down 1% at 363. U.S. nat gas is up 1% at 941, and we saw where the Dutch nat gas future is. And now to a very important part of the system, last but not least, the bond markets. So U.S. Treasury 10-year yield is down about 3 basis points at 296. The 2-year is at 226. So we are 30 basis points inverted still, the yield curve. And a quick look at the 10-year gilt yield. Yes, that's pretty much unchanged from last Friday. It's at 2.41%. I spoke about sovereign debt yields yesterday in my live stream, and I recommend you watch my live stream if you haven't yet. And yeah, things are starting to look very interesting in terms of the bond markets. We're seeing yields across the board going higher, and that's very bad for the system. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide, and think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.